Howdy all, my apologies. My apologies. I will explain why running a little bit late. I will explain in a minute here. Let me get Jordan added as, oops. Come on. Yeah. Host. Testing, 1, 2. Testing.
I can hear you.
All right, 1 second. Okay, my apologies. I literally just ran into the hotel room here. I thought I would be set up and ready to go a little bit sooner with less urgency. I'm in Florida, traffic's bad. It's hot as all get out. But we're here now. So today, in our sort of ongoing mortgage info session series, we're going to talk about renovation loans, and specifically some of the program guidelines and specifics, but then also would love to mastermind and brainstorm how you can use renovation loan programs to sell more houses. And we'll give some examples of what that might look like and how that might work. And then if you want help with that, how we can help with facilitating that, both directly helping clients, but also even from a marketing perspective. And in fact, I'm just going to plug our team here, pat ourselves on the back a little bit. But this week alone, from some of our realtor partners that are using what we call our V qualifier process, this week alone, we've set, I'm losing count, something like 14 phone or Zoom appointments with just leads, contacts, just sitting dead in databases. We're really getting that process dialed in, and that's just from existing data, not even on new lead gen. So anyway, a couple other quick housekeeping items. If you want to go back and check out past sessions, this is our, I don't know, I'm losing track, 5th or 6th session of these mortgage info sessions. All of the replays are on the Wake Up Real Estate YouTube channel. There's a playlist there, or if you just go to wakeup.realestate, you can check them out. You have to look a little bit harder there, but they're under latest info. But easier is the YouTube playlist, which I'll get the link to the playlist in the chat for those who are interested. Nothing for sale here ever. But if you want to check out how we're helping agents with their lead conversion from the financing side of things, you can go to vqualifier.com. vqualifier.com. There's a video explaining some of the different things that we're offering and doing. And then there's an opportunity to get started with the process if you're interested. So without further ado, Jordan, let's talk renovation loans. Fixer-upper financing is what Ryan likes to call it. Fixer-upper finance.
I don't know if a lot of you know my background, but when I started,
let's start with
industry, so I started when I was 18. I got into mortgages at 18 years old, and I asked my mentor, "What is the hardest loan I could possibly do and be good at it?" And she told me renovation loans. So I did about 6 to 7 of these a month for the first couple years of my career. So I have insight on one, how they're done, but two is like, what are the things that we want to avoid when we're talking to clients, how to go about doing them, like almost like a little bit of the nuance sides of the renovation loans. I consider renovation loans and really into 4 products. 3 are renovation loans and 1's an extra bonus product that we'll talk about a little bit. Okay. It is technically categorized as a renovation loan, but it's only on for specific properties, and it's for $5,000 or less in costs. I'm going to say the most common one is definitely the FHA 203K. That's what most people hear about. That's what most people talk about because it's by far the easiest to qualify. Okay. But so I want to go over the FHA 203K. We're going to talk a little bit about what down payment requirements are. We're going to talk about what we're really looking for, some differences in the 203K. The 203K is probably the most well versatile when it comes to renovation loans, how we can use it to help our clients, but also what are the little bit of the nuances about it that I will tell you that we need to make sure that we do not overcommit to our clients in doing. I know that's probably a weird statement to make, but we want to make sure that we stay in our lane in a certain areas. And we don't overcommit because you will burn yourself out on these very quickly as a real estate agent. You'll burn yourself out on these if you try to help them in certain scenarios. We want to keep the contractors doing certain things. We want to keep the real estate agent doing certain things, and we want the lender to do certain things. We all have our roles. And the moment you start stepping into other roles, I'm going to tell you this. I've done it a lot of renovation loans, and I've had real estate agents quit. Right. And stop wanting to do them because they would want to step in other lanes and try to figure things out. So we're going to talk about that a little bit as well. So let's start off with the FHA 203K. We all know our down payment on FHA 203K, it's 3.5%, right? That is going to be after renovation value. So I'm going to give you an example. And a lot of you know I like to call your name. I only see some of your names up here. So I'm going to let's say Sarah came to me and said, hey, Jordan, I got a house. I have a house where a client wants to redo the kitchen. The kitchen's going to cost $150,000, just to keep the math simple. It would be 3.5% down on $150,000 because the original purchase is $100,000. The renovation is 50. You would need 3.5% of the total after renovation value. Not necessarily after renovation value, but you would need 3.5% of what the acquisition cost plus the reno. Okay. It could be when they remodel that the house is worth $70,000 more. We don't make them put 3.5% down on that. We make them put 3.5% down of whatever the total cost is. Okay. Acquisition cost. With that being said, typically I want to see about a 640 credit score on this, not a super high credit score. But if you're wanting approved eligibles, they don't do a lot of manuals on these. They're just usually a higher requirement on most banks. Usually 620 to 640 are the overlays on these products. And they're a little bit higher with even the home style renovation for you to get an AUS accept. And that's the conventional one. And we'll talk about that in a little bit. Let's talk about how much the renovations. There's two different types of 203Ks. A lot of people don't realize that there's actually two different types. You have the limited 203K, and then you have the full-blown 203K. Okay, Josh, have you ever heard of those? Or
no, I know I think I know the special one that you mentioned, but I'm not sure. Is it a dollar amount? Is it based upon a dollar
amount? Exactly. Okay. Dollar amount of renovation. Yeah. So the limited 203K. Well, first off, let's make it there. You can't do a renovation loan on a 203K loan unless you're renovating at least $5,000 minimum. Okay, that's the minimum. There's nothing less. If the home itself, they're wanting to do something that costs $3,000, they're going to have to come up with something to do the $5,000 difference. I personally wouldn't recommend a client to do a $5,000 renovation. The cost, we would rather do a personal loan. I've talked to clients about doing personal loans and things like that to get around it. Little off topic.
Not much you can even get done for $5,000 anymore.
I know you really can't. So, but at the end of the day, let's say you want to do a renovation loan. The max for a limited is 30,000. It's technically 35. So you'll hear people, it's like, you can put 35 into it. There's a 10% tack on to that. They tack on 10% for unforeseen things. Yeah. So $30,000 is really the number that you're looking at for the limited 203K. And the difference between the limited and the full blown is, one, the type of work you're doing. You're not doing any structural work, right? It's mostly cosmetic stuff like that. You're not adding an addition. We're not tearing it down and rebuilding it on the foundation. It's a very limited thing. You also don't need a HUD consultant. Okay. HUD consultants are someone that basically babysits your contractor. These are former contractors that work for HUD. You have to pay them. They are expensive. Okay. They are part of the closing costs. It's something that we add in. But if you are doing like a $75,000 renovation, we need a HUD consultant to come in, basically advise over and oversee those draws after closing, and really what the contractor is going to be doing, at the end of the day, to make sure that the contractor is doing ethical decisions. They're not cutting corners. You know how it is. I mean, it's contractors sometimes can, do code violations and set you up with code violations and not really know it. So anything over $30,000, really, you're going to have a HUD consultant involved, which makes another aspect of these renovation loans harder. I have had a HUD consultant fire a contractor. I've had a contractor want to quit over a HUD consultant. It's another hand in the cookie jar. That's another reason why it can be a little bit difficult. Okay. For the most part, that's the gist of the FHA 203K. Everything else is the same as an FHA loan. So really, we want to talk about what can you do with it, right? Where can this actually benefit real estate agents? Converting a home to up to 4 units. So let's say you had a duplex, you wanted to convert it to a quadplex. You could do that. You could do it. You could take a fourplex and move it down to a single family. You could do you can do a conversion of existing multi-unit dwellings from 1 to 4. You can do a tear down and rebuild as long as the existing foundation is. I've had people take over people that started construction, right? Maybe they started construction on it. They have the foundation built and they got the framing up and then they ran out of money, right? That happens sometimes. I've had people find deals on those and basically, sell it for the price of land and, get a pretty good cost on it. And then we finished it out with an FHA 2 or 3K, right? As long as we're not touching foundation, usually, typically we can tear that whole thing down and rebuild it from the studs. Okay. Now, you can do, anything that's really eliminating any health and safety hazards. You could do reconditioning or replacing plumbing, installing wells and septic systems, adding or replacing floors and floor treatments, major landscaping work, accessible for, a disabled person, and also making energy improvements, right? If you're wanting to put solar panels on your house, sometimes that is cheaper than going another route, depending on where you're at. Doing some sort of solar panel or energy efficient work. But pretty much you can do anything with the FHA 2 or 3K. One of the things that they don't allow you to do, we don't put in pools. Sorry guys, if you have a client that's really wanting to put in a pool, they're not going to do a pool. Now you can do that with a conventional one though. Okay.
Oh, I didn't know that.
You can do a back outdoor kitchen. Really it's thinking outside the box to sometimes make a home fit what the client's looking for, instead of making that trying to find the perfect home, right? Maybe they want something changed. Maybe they don't want a wall here or there. We can totally tear those out, tear those walls out, restructure. Doesn't matter at the end of the day, as long as that we're not touching the foundation more than anything.
And so you touched on one of I think the biggest opportunities in our current market conditions in being aware of these programs, because I'm sure you're all, as is my team, working with clients, and because inventory is so low that you're either losing out on homes where they fit the client's criteria, but they're priced right and they're in great condition, so there's multiple offers and you can't win whatever, or other, maybe other factors in there. And maybe if you're able to do the legwork to find a property that fits what they're looking for, location wise and property size wise, et cetera, but it's just that the home itself isn't exactly what they were hoping for, this may be a way to solve that problem. And potentially, a lot of times those types of properties are the ones that aren't immediately going under contract with multiple offers. And so less competition. And if you and the client can be a little bit patient and creative, it might be a wonderful solution and way to provide better service to folks.
We had a couple of questions. I'm going to answer these questions, and we're going to get in the nuances of this.
Okay.
Quick. What's the max acreage? Same as FHA. So typically max acreage is going to depend on bank. Most banks are 10 to 20 acres. With that being said, you got to be able to find comps, right? There's got to be comps there. How they're going to appraise the home is going to be appraised off of the house existing plus specs and plans. Okay. Just like if they're doing a new construction build, the appraisal is done off of future value. Okay.
After repair value or after
repair value.
After renovation value.
Yeah. After renovation value. Exactly. So some of the new nuances of it. I don't care what it is. I will never do a loan for a family member that is using a family member for construction. It is a nightmare. I'm going to tell you that right now. That's what most people want to do, and they're not going to do the work themselves. It has to be by a licensed, insured contractor. No ifs, ands, or buts, period. I have a lot of clients that will reach out to me and they'll say, hey, I want this house. I want to remodel it. I'm going to do it myself. Nope. No, you're not. We're not going to do it ourselves. Number one is it'll never get done. That's number one. That it doesn't 99.9% of the bank. One, they got to be licensed and insured contractor. That's the first criteria, and they might meet that criteria, but they do not let you do your own work, right? A lot of it has to be at least overseen by someone that's going to be signing off on this work, and it has to be done on a schedule. We close on these home loans before, so you guys get paid your commissions before we even have the work start. So at the end of the day, the bank is going to be putting massive amounts of pressure to keep that timeline, on the straight and narrow. Typically 6 months max, right? But a lot of times people will want to use their cousin, brother, sister, whoever it is to do their work. I do not like that. One, they don't turn the paperwork in on time. There's a lot of paperwork with this. It is not like a normal loan. And that's what I mean about staying in your lane too, that I mentioned before. I would never ask Josh and put pressure on Josh as the real estate agent to reach out to the client's contractor to get their paperwork in. It is your client's responsibility, period. It is your client's responsibility to get that contractor to turn in their paperwork. It is the first conversation I have with anyone that is thinking about doing a renovation loan. I will not be following up with your contractor, and your real estate agent will not be following up with your contractor either. Okay. It is too time consuming. It will literally engulf everything, because contractors are not paperwork people. I promise. Okay. It just happens to be that way. I actually did so many of these. I gave out 5 recommendations for contractors that would do these with me often. If you guys can find someone you can refer your clients to, if you want to do these as almost like a niche product that you do on a regular basis, that is the best situation that you could possibly be in. Okay. Is that you can recommend, here's 3 or 4 people, get 3 or 4 bids. They come out immediately, bid it out. They already understand the paperwork they're turning in. I would rather you guys do that than let the client go pick their contractor and figure out, figure out that process. But if they do, and they're adamant on it, and they're adamant shopping into the guy down at the corner store that has his license and license and insurance, that's fine. That's within their right. But at the end of the day, I make it clear to them that it's their responsibility. It is your responsibility to make sure your contractor's in it. It is not your real estate agent's, and it's not ours. Okay. We'll request the documentation. You'll be CC'd on all of it. And at the end of the day, your contractor needs to turn it in. Okay. The other thing that I want to, another nuance about it, no fire damage, things like that. Anything that's, and there's exceptions to this, but most part, if the house burnt down, we can't, unless you're bulldozing it and rebuilding it, you're not going to be able to remodel it with these loans. So if you had like one part of the bedroom, kind of like burned out, that remediation, things like that, there's just too much that goes into safety stuff that FHA won't allow that stuff. Okay. Besides that, I mean, it's open season to do anything you want. I mean, they're really cool product. I've had people put out backyard kitchens on, drop 20-30% down, put in, backyard kitchen, pools. I've seen people do additions, open it up to where there's more bedrooms. I've seen people do conversions from multiple, units to maybe 2 units. Maybe they had a 5 unit and moved it down to a 4 unit. So it would qualify, within FHA. It just depends on what it is. Right. But I've seen conversions done, garages, storage shops. Maybe that person is really adamant. I mean, you'll find that more often than not, is you'll have someone that wants a 6-car garage with a shop in it. That's more likely to happen than someone trying to, convert into multiple units. This is a perfect product for that person, right? You're now no longer limited by finding, detached garages with a shop. Now we can just build one.
You can creatively solve your clients. If you have clients that have very specific needs or wants, or even very specific tastes, let's say, this is a potential solution that is worth exploring. Something I wrote, because I knew Jordan was going to bring up the fact that these are really hard. Something that I noted to myself that I've heard Tom Ferry say often: you have to choose your heart, right? Like if you're struggling to help clients, given the market factors, this is a something that could potentially help with that. It might be hard, but is it harder to do this and help a client and get paid, or just hope that the right property just happens to pop up and you're able to make something happen? Right? Choose your heart. Choose your heart.
I want to expand on that a little bit too. They're not hard for you guys. They're hard for me. So I mean, in general, like if you're using a random lender for FHA 2K that doesn't do them often or hasn't done them in the past, it's going to be a rough process. That's what I mean.
Because they'll be learning with you, sort of, and not that it's even on you, but it will affect
endure.
You. Yeah. If you and your client are their guinea pig, that's not a great idea. Never. Whether it's this program or others. It's never. Yes, Tom's great, Chip, and I'm with you, buddy. But the choose your heart. Some of the stuff he says has relevance, but I'm with you on your comment there. Rich Schaefer, and folks, feel free if you want to open your line. I don't know if you have to ask, or if you want to open your line to ask questions, or if you want to drop them in the chat. Rich asked, if the original home was destroyed in a fire and a new home was just built, could a buyer of that property use to build a detached 2-car garage? Seller ran out of money. Blah, blah, blah.
As long as you have the appraised value there. So a lot of times when you add garages, I mean, you guys know, you guys are realtors, probably better than I do. When you have a client looking at, an addition, or maybe it's a 6-car garage, a 2-car garage, whatever, a detached garage, how much value is that going to add, right, to that property? Is there enough value there for it to make sense? 9 times out of 10, yeah, maybe. Yeah, especially if it's a property that needs a 2 or 3K, it's absolutely going to make sense. You probably will have equity, left over. If it's someone that it's like a really nice house, you're buying it, they're selling it for top dollar, and you're trying to add a detached garage, I don't know. It's just going to depend. Now, here's another cool thing about FHA, 2 or 3Ks. You can go up to 110% of appraised value. Okay, so if it doesn't quite appraise, you got a 10% leeway there.
Huh.
So if it's a $500,000 home, $50,000. See what I'm saying?
I did not know that.
Mm-hmm.
So,
there,
and we're
there is
talking
a leeway
the
there.
after repair appraised value.
Mm-hmm.
Yeah.
They have a 10% leeway.
That's a lot, actually.
Yeah,
10%
it is.
a lot.
It is. So you're not going to run into it a lot. I haven't ran into a lot, but it's happened a few times. It's happened a few times where it doesn't appraise out because we're trying to do something crazy.
Yeah.
Moving it down from a 4-bedroom to a 2-bedroom. Is that really going to add appraised value to you? You're probably going to go the opposite direction.
Right.
But it might be the perfect home they want, right? All you can do is advise them the best you can and be like, this might not be the best, decision to make.
Yeah.
Because your appraised value is going to come in less. Okay.
In case you can't tell, I mean, Jordan's kind of like our guideline guru. He knows these guidelines, whether it's for renovation loans or others, like the back of his hand. And so if you have a situation or scenario for a potential client, or just, theoretically speaking, that you would like to run past him, but just don't want to ask, live in an open forum here, I did
Email
put,
me.
I did put his contact info. I'll put it again here because I know depending on when you may have hopped on, it might not be visible to you for whatever reason. I also did mention something that we're offering called V Qualifier, which is a way that we can help you increase your lead conversion and get more from your existing database. Pull out those potential clients that are just kind of lying there in the weeds. Any other questions, scenarios, points of interest? Jordan, go ahead.
I want to move on to a couple other products that we do.
Yeah, okay.
But that's one of the things I want to go back to what you're talking about on guideline wise. I had someone ask me a question today. Just shoot me an email. You'll be surprised at how quickly I respond back with. The question was today, someone shot me an email and they're like, hey, I'm listing a house. There's no appliances. Does it qualify for FHA? The answer is yes. Right. You don't need appliances. It's to basically buy an FHA. They were going to offer a $5,000 credit for appliances, but it was basically an investor that didn't have appliances in the property. If you have like weird kind of scenarios or like, hey, I don't know, you can always shoot me an email and I'll get to it pretty quickly. Danny, you have a question?
I do. Hey, how are you?
Good. How are you?
Good, thank you. So my question, so I have attempted to do a couple of the full-blown 203Ks. My issue always, my issue has always been with the consultants.
It is.
Trying to find a good consultant and it's like trying to find a good contractor.
It is. So I interview these personally myself when I do a 203K. So I'll give you an example. I live in Wichita, Kansas. We have one consultant. I don't use him. I go to Lawrence, Kansas, 2 hours away, and I use that guy at $150 more per inspection. A good consultant, finding that good consultant matters on the lender that you're working with. I personally pick up the phone. I talk to them. I talk to them about what their plan is, what they're going to do with the client. But that is the difference between someone that did a lot of these, right? If you leave it up to the buyer to find that HUD consultant a lot of times, or the lender. Yeah, it's going to be a little bit more difficult to get done. But that's what I mean about staying in. I talk about a lot is like a realtor has their job. I don't want them talking to the HUD consultant. It's not their job, right? Their job is to find a house and find the house that you're wanting and then we're going to spruce it up a bit, right? You've done your job. But what happens is there's going to be problems with the HUD consultant, and then all of a sudden Danny's jumping in trying to fix it.
No, Danny doesn't want to do your job. Danny has your own job to do.
But that
Okay.
I'm just saying, yes, they do. They have a list of HUD consultants, but that's
Thank
what
you.
we refer to, Stacy, is that list of HUD consultants. Not all HUD consultants are created equal, and it's a little bit of a challenge sometimes.
Just like not all mortgage brokers or loan officers are created equal, or realtors for that matter, right? So
Yeah.
you definitely have to do your due
It
diligence.
goes back to me knowing guidelines. I actually was trained by an underwriter of 20 years, a head underwriter of 20 years. So she actually made me read the books. So I know that's the reason why I know the guidelines. So my
And
baseline.
I'm not just bluffing there. He knows them. I mean, it is crazy. We'll have our mortgage team huddles, and one of our LOs will throw out a scenario, and Jordan's like, refer to this page, call this number, say this, and it'll be fixed. And
yeah,
that's exactly what happened. They do those 3 things and it's fixed.
Yeah. Since FHA does not do foundations, will they allow crawl space engagements where a lot of older homes need to have crawl space height, especially on rural properties? That's a good question. I would have to talk to a HUD consultant on that one. I haven't ever done a crawl space enlargement. But I would think they would. I would be surprised they wouldn't. Especially because they would need to qualify. They have to qualify for FHA itself, and they have to get in that crawl space itself anyway. So I'd be surprised if we wouldn't be able to do something like that. But we could always go Fannie Mae home style. It's different rules, you know. It opens up a little bit.
So Glenda asked, when does the realtor get paid for 2 or 3 Ks? At the initial closing.
Yeah.
At the initial closing. Which
so
is
everything we're talking about of what they can do, you're already paid. You're done. Like the process is done. The challenge is getting the specs and plans and getting the HUD consultants and contractors reeled in to get us the paperwork we need to close. That's where I talk about staying in your lane. We don't volunteer our realtors to do that, period. We don't volunteer to do it either. I make sure that the client is fully aware that this is their responsibility, and I will be putting a massive amount of pressure on them to get their contractor in order if they choose their own contractor. Otherwise, if we have a contractor in the area that we've talked to, like I built a list for my specific area that I know the contractors know how to do 2 or 3 Ks. So that's how I got around it. But I'm going to tell you, contractors are going to be paying the butt no matter what. HUD consultants paying the butt no matter what. It's a matter of how you handle them the best way we can. Okay.
So in the interest of trying to keep this relatively short and sweet, what some other programs you hinted at? One, what are some other options besides?
So let's talk about FHA 2 or 3B escrow. So what do we do about $5,000 and less? So HUD homes specifically, we talked about HUD homes with $100 down in the past. There's also a renovation loan for a HUD home. So a lot of times they won't allow you to touch the property on HUD homes, right? If you're selling a HUD home, where there is something called an FHA 203B. That's a normal FHA loan. Okay. There is an escrow option on HUD homes for $5,000 and less before it turns into 2 or 3K. So for specifically on a foreclosure HUD home, you can't touch the property. You might need to do some repairs on it for it to pass an FHA appraisal. There is scenarios that we can do a 2 or 3B escrow, which is technically a renovation loan, where we're going to escrow for that bid for 1.5 times, and basically roll that money into your loan and you'll close on it. Okay. That is one. And then we've all talked to, all these are primary residence or second homes that we're talking about. And then there's also investment properties, fix and flip investment properties. There's fix and flip, fix and hold, whatever you want to call it. That is someone for your investor that's wanting to buy a home. We can do like 90% after renovation value. Sometimes it's 100%, just depends on their credit profile. Typically, they are not income driven loans. Okay. They are like sort of like a DSCR loan, of how that will rent out or how it will appraise out. But basically, these loans are more of a fix and flip, short-term 12-month financing style investment property. So if you're trying to invest in a home and remodel it, it's actually much easier than doing a 2 or 3K or a home style. It's a much shorter process. I funded those in 7 days sometimes. It just depends on the investor and how quickly they want to do it. The risk is a lot shorter because of the length those loans are available for. They're not 30-year financing, they're 12 months, 6 months.
Anything
yeah.
we missed?
No, I don't think so. I think the biggest thing I want to impress on these is like it matters who's doing your 2 or 3K. If you're wanting to get into these or try these out, there are a lot of nuances when it comes to these, and you're gonna hear from lenders all the time that will say, "Oh yeah, we do those. Like it's no, we're the best at those." No matter what lender you have, this is just me being transparent. They're not fun to do, period, for anyone. They're a challenge, and if you don't know what you're doing, it will be drawn out, and you guys will be pulled into that trying to figure out how to get your closing done. Typically they're a longer process, 45 to 60 days. And I always like to do 60 because it's rounding up the contractors. Rounding up contractors are the challenge. The loan itself is not a problem. Going through underwriting itself is not a problem. It's the HUD consultant and it's the contractor, and getting those people organized and to do what they need to do is usually the issue.
Marcella asked, do we do reno loans in all states, specifically Georgia? So not in all states. So NEXA and Axon, well, NEXA is licensed in 48 out of 50, not yet in New York or Massachusetts, because just transparently, they're a pain in the ass. However, our team specifically is not licensed in all 48 states. We're working towards 35 are relatively simple. Where are we at, Jordan? 20? I think 20 some.
Yeah, 20 some. We just picked up Minnesota and Washington.
If you have a
week,
question, if you're not sure, just reach out. But we're in a lot of them, a lot of the major states where there's a lot of activity. We're not in Massachusetts, we're not in New York, we're not in Nevada. Our team, that is not in Nevada, but we're active in yes, in Texas, Florida, PA,
usually
Virginia,
the major
Maryland,
ones:
North Carolina,
Tennessee, Texas, Virginia, Washington,
Alabama,
Minnesota,
California, Arizona, Colorado,
Kansas,
Oklahoma,
Missouri.
Yep, Missouri.
Mhm.
Other questions. What requirements are you looking for? Fix and flip, income, credit, money reserves, etc.
No income usually. Credit, typically we want to see around 620, 640. There's going to be reserves a lot of times, at least 6 months reserves. And then it depends on the after renovation value, right? When you put the specs and plans together and out of it, we're going to order an appraisal. We'll determine how much money you need to put down. So typically you see it like the traditional ones. Like if you want to open yourself up to all lenders, you're looking at 10 to 20% down after renovation value. They're still investment properties, 10 to 20% down. Now, with that being said, if you have a 780 credit score borrower, do I have a lender that would let you do 100%? If there's the equity position there? Yes. It just depends on your scenario, right? So there's a lot more leeway on those compared to when you're doing a primary residence or a secondary residence, such as an FHA 2 or 3K or a Fannie Mae's conventional home style renovation. Those are going to be more like the traditional FHA and conventional loans.
Yep. If the contractor and consultant are efficient and work well together, could this be done in less than 45 days?
Yes, absolutely.
Okay.
Mm-hmm. Yeah, it could.
Keyword there, efficient. The key word there is efficient. Just
let me put it this way. Danny brought it up right earlier, is she's had HUD consultants that were probably a nightmare to work with, right? Efficiently, it's like if they went out there immediately, like anytime an inspection's done and they're going out there the next day, that doesn't happen. Think about it as like a start-stop place, right? A start-stop every time they're trying to do something or do something. The HUD consultant needs to have, maybe they need to go out of the property and talk to the contractor. Maybe they need to do this, and then something needs to happen. There's usually, maybe he doesn't like this part of the bid. Maybe they're saying it's not up to the code. They're going to go back and forth quite often, usually. And that's why I try to tell people, if we can keep it under 30 grand, let's keep it under 30 grand as much as we can. Because if we can avoid a HUD consultant, that's ideal. On the Fannie Mae products, it doesn't matter. You have a HUD consultant, no matter the price.
Along those lines, not exactly apples to apples, but I've been talking about lately how the wholesale lender that NEXA as a brokerage does the most business with, we have an average days clear to close under 10, 9.4, I think at last check. That is extremely reliant upon the borrower, right? Like they can make it happen quick, but you've got to have borrowers that are strong borrowers, A, B, and B, that, you know, get their documentation and paperwork as timely as possible. But it's entirely possible, you know, that's what's possible, right? That's in a perfect world, if you have compliant borrowers.
I'll give you an example. I turned in a loan yesterday. I have it out of underwriting today with that lender. Approved.
That's incredible.
So it's about 24 hours on our cookie cutter stuff. When I say cookie cutter, it's a higher end client, you know, FHA, conventional, just normal, you know, buying a house. These specialty products, they just take longer in general. And yeah, Chip, you're 100% right. You're better off, you know, he said, you're probably better off being conservative, warning your client it could take 60 days, but shooting for as soon as possible and under promise and over deliver. That's exactly what happens every time. Is I typically tell people it takes 60 days. We close usually within 45, and we move things up. In this market,
what's possible, here's what's realistic, right?
Yeah. So it's a big difference. But that, again, that is me. Like I'm pretty straightforward with the client, and we do a rundown. When I have someone that's wanting to do this, I don't try to talk them out of it. But what I do try to do is I try to impress the importance of gathering the contractor up and putting us in a position that we can do these renovation loans and do them effectively. Because at the end of the day, there's a seller on the end of this, and they could pull it right out from underneath us if they wanted to.
Yeah. Shan, and I believe they had hopped on late. We do have options for investors, fix and flip type financing for investors. Most of the programs that Jordan was talking about are for owner occupant or second homes. But if you work with investors, or if you have a scenario like that, we do have programs.
They're easier. They're a lot easier. I didn't talk about them so much because, quite frankly, they're not very hard to do at all.
Yeah. Now they're gonna require
money.
What's that?
Investors, are they kind of like a hard money loans?
Yeah, a lot of them are like hard money loans, short-term hard money loans, you know, stuff like that.
But we have,
upfront,
because of our relationships and the number of lenders we have access to, we have a wide variety of options as far as that goes.
Let me put it this way. I have 4,500 different lenders for possibly they'll do fix and flips. There's a lot there. And basically what we do is we shop it. We shop it and we say, hey, what are your requirements? Does it fit in the box? Does it fit in this box? We get the criteria of the client, we shop it. You in South Florida,
we do lots of business in South Florida, and Chip, everywhere is a difficult market right now, honestly. But we do lots of business in Florida and South Florida.
Yeah. So my career started out in Kansas. But I traveled from California, Arizona, and Kansas City for a large portion of my career, and I did a lot of transactions there. And then I went national probably 3 or 4 years ago. But I ran a team of 500 loan officers, a training program, 500 loan officers across the U.S. So I've done loans in every single state, almost, except for Massachusetts and New York, really. but I've overseen and helped loan officers all the way across. So the nuances of states, there's certain nuances of certain states. Florida has high closing costs, things like that. A little bit difficult, more difficult for DPAs, so on those natures, but we can do them pretty easily.
So, and I want to respect everybody's time. I'm going to drop in the chat. I dropped Jordan's contact info once again, and the link to V Qualifier, which is what we're doing to help folks with their lead conversion. I mentioned at the beginning, I'll mention at the end, we're having a ton of success taking people's existing sort of old dead databases, contact lists, etc., and turning them into appointments and getting them re-engaged and interested in transacting real estate. We've scheduled just this week already, I don't know, 14, 15, 16, something like that, appointments just from one activity, one methodology there. So you can check out, there's a short video there at vqualifier.com. If you have a scenario or a situation for yourself or for a client, or just theoretically, so you can feel more educated and knowledgeable about whether it's renovation loans or any other type of loan program or product, you can reach out to Jordan. If you email him, he is very responsive by email. If you call or text him, he will get back to you as soon as possible. His calendar is filling up because he's taking a lot of the appointments that I've mentioned that we've been scheduling this week, but he certainly will get back to you. And if you have questions on the marketing side of things and what we're doing with V Qualifier and some of the other things, you can just get in touch with me, and I'll put my cell phone and my email address here as well. You can reach out to me, or you can even schedule a time to chat with me. josh15.com is my calendar. We'll get the recording out, the replay, either later tonight or tomorrow morning to everybody. So if you want to watch this again and take more notes, etc., appreciate you spending some time on a Wednesday afternoon. Jordan, thank you so much for your knowledge and your expertise, and sharing that with the good of the group. And let's all make it a great rest of the week.
All right, thanks guys, have a good one.